The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, outside of the corn market on Tuesday, everything else was mostly in the red, and corn technically in the red, but I'll call it firm to even on the trading session. And we did have one green number in June live cattle as we got to Tuesday's close, but overall just felt like more downside pressure in a fairly quiet trading day. But these markets have been a little ugly to look at here since Memorial Day. Joining us now to discuss what's happening in the markets and provide analysis, Brian Splitt with agmarket.net. Brian, welcome back to the show, and it's good to talk with you again, my friend. How are you?
I am great, Jesse. Always good to be here. Thank you for having me.
Well, and I wish we had more exciting things to talk about in these markets with you back on the show here today, Brian. I tell you what, it's just been really since Memorial Day, kind of what I mentioned there. These grain markets overall have been a little tough to look at, haven't they?
They have. I mean, you think about really what's happened in both corn and soybeans since Memorial Day. Essentially, we've given back all of our gains for the month of May in 5 sessions. So all of that work that we did in May and that nice steady uptrend and, the 2 steps forward, 1 step back, it was just 5 days of straight selling coming out of Memorial Day, including yesterday. And hopefully we've kind of come down to some good areas of support here for the short term. So both July and December corn have really reset themselves back to where we were trading going into the March planting intentions and quarterly stocks report. And again, that was a friendly report that day, and we did rally from the report. But it should be a good level of support. We did break coming into the planting progress and crop conditions. So planting progress is fine. Crop conditions were bigger than the trade as a whole had expected. So just the fact that we had 75% good to excellent on corn ratings, and the market stayed near unchanged and actually traded higher for a chunk of the day, is maybe a small good sign that they didn't push it further based on those numbers. I think we hold this area 460 D's corn. If we can do that, we should revisit 480. I think if we do revisit 480, it's going to look a lot like a textbook right shoulder on a head and shoulder top. So unless there's something behind that rally and there's more teeth to it, meaning a more longer lasting weather event, I think that might be our last gasp at getting some kind of sales on if you haven't done so already for corn. And hopefully, I hate using hopefully, but hopefully the chatter becomes more about the heat that we're going to get later this month and into July. A lot of the weather outfits are still talking the idea of record heat. And so, hopefully as we get closer to that, if that narrative creeps out a little bit more, that can support things and give us another shot.
Yeah, that 75% good to excellent nationwide on corn condition. I was a bit surprised by that number, just considering some of the challenges we've had through the month of May trying to get this crop into the ground. And so I would agree with you. It's going to take some sort of a weather event here to give us probably a rally in corn. Soybeans, I'm a little more concerned about the bean complex right now. What are you seeing on these bean charts? It's felt like the last few sessions we've done a fair amount of technical damage. Have we?
We haven't done any more damage than we have in corn, I guess, put it that way. So very similar. We've reset ourselves back down to where the that last rally started, right? Right at the beginning of May, we took off. The May low on the November soybean contract was 11.63 3/4. I think today's low is 11.64. So we're just right back down to the May lows. We do have another set of lows that was made in mid-April that I think was maybe around the 11.54, 55 area. So that might still be another little bit of a target. That same low on beans would be where corn is now. So beans are actually, relative to corn, holding some of their levels a touch better. They've come and visited these support levels after corn has already taken them out. But here's the problem. Both corn and soybeans, and wheat for that matter, we feel all of them will be substantially lower in 3, 4, 5 months from now. It's just a matter of trying to do the best you can with selling bounces here in the short term. And so, will a sale at 460 look good come October? I think it will. Do you need to sell that today? I don't know. Hopefully not. Hopefully we can see 480 and that, gives you that opportunity to get another 20 cents out of it. But the problem is going to be if the high has already been made, and it very well may have been if we don't have a more meaningful weather story to trade, this next short-term rally, if we can hold support, it's going to be about it. And seasonally, it's very difficult to want to not have a good chunk of your marketing done as we get into July. So maybe in the next 2 to 3 weeks, we can get another little bit of a run up here and get something done. But I'm very concerned about where things are going to be come late August, early September into October.
And that's a great point you raise. Whether we're talking corn, beans, or wheat here, the seasonality in this time window here, kind of headed towards Father's Day and the 4th of July. To me, it just feels like this year, especially with all the volatility and where the cost of inputs and things and more are, you gotta manage your risk very wisely in this window. We can't outguess the market, but to your points, the way things are kind of setting up here, it's just seems smart to really try and get ahead of your risk management in this window, Brian.
Yeah, this may be one of those years where you are better off selling it a little bit early than selling it too late, because we got used to in 2021 and 2022 where patience paid off. But 2023 was a transition year from bull market type behavior to bear market type behavior. And so now that we're in 2024, it's hard to dispute that we have had more bear market behavior. Basically we made the high for the year the very first trading day of the year for corn and beans. We have not been able to push through those highs made in January. We got somewhat close to them, but at this stage, we are in a bear market. And so with that being said, in the next several months, if there's not a weather story, we're probably going to be $1 or more lower in corn, and I think we'll be $2 or more lower in beans. And I think all wheat varieties will probably be close to $5 as we get to September. The only caveat might be if Russia comes out and says they're not going to export wheat, or there's going to be some kind of an export duty, tariff, however you want to say it. But without that, I think we have to realize that the last couple months that we've seen wheat go up $2 plus has priced in the concerns that we have about Russia.
Brian Split with agmarket.net joining us here for market analysis today on the show. And, Brian, I look at soy products as well. Meal down, I think, 5 of the last 6 sessions there. A lot of funds that seem to be long in that market, it looks like. Bean oil, I think, getting some pressure from this falling crude oil market, too, with the OPEC plus production cuts continuing, things like that. Any notes for that broader soy product market right now?
Yeah, you look at bean meal, and the nearby July had a very distinct double top. And so the low that was made in between those two highs was at that 465 area. So taking out 465, which we've done, that suggests that we should go down and visit about the 440 to 435 area. So I think we're trading right around 455. If we were to bounce back up into the low to mid 460s, that's likely a selling opportunity. But breaking through 465 is what verified the double top on the meal. So again, that meal rally that we had, I think, had a lot to do with the flooding in Mato Grosso do Sul. That was a period where we had a late season loss of soybean production in that particular state. That particular state does process an awful lot of their beans for meal as opposed to exporting the soybeans. And so that's why that move was really led by the meal market at that point. And again, much like wheat in Russia, at some point you price in the loss, prices go up, those higher prices do things to demand, and then the market backs off again. So I think that's what we're trading right now in the meal, is that we priced in all of that concern about Mato Grosso do Sul. We probably overdid it, and now the technicals are breaking down again. Bean oil, without a doubt, there's a pretty good correlation with crude oil, and so yes, OPEC Plus said we're going to keep our cuts as is until after summer. The market apparently needed more than that. They wanted to see not only the status quo maintained for a few months, but additional cuts. They didn't get that. So now we've got all varieties of energy, whether it's crude oil, the RBOB, which is your unleaded gasoline, heating oil, which is your diesel fuel proxy. They've all broken down through support and have made some sharp losses in the last couple of days. So we're starting to revisit in some of these energy markets lows that were made in May of a year ago. So again, for the outlook for grains, it might be a little helpful if we could hold crude oil and the products at these levels and then see a recovery bounce. I don't think that would hurt the grain sentiment at all. But man, it's going to be very difficult because crude's just one of those markets where it just tends to be kind of that bellwether of commodity outlook, right? And if crude oil is falling apart, then it's tough to come out and say, well, I'm bullish commodities as a whole, unless that specific commodity has its own story. So we would really like to see a rebound in energy values over the next couple of weeks to maybe help accommodate a recovery bounce in corn and soybeans.
I think about a lot of other markets here too, and I'm going to do this kind of broadly, Brian. But energies. We can look at currencies, metals, gold, silver, copper, you name it. Cotton, I'll throw that there. Coffee, cocoa, lumber, all these other markets that have shown lots of volatility here in the last year at different times. A lot of it, too, I think, tied to the inflation story. Treasury yields have been an interesting ride the last few sessions. I mean, I think all of this, you got demand on one side for many of these commodities, and livestock could be thrown in there, too. And then you got kind of the inflation play and some of the fund manager money movement in a lot of these markets, just kind of adding to this overall sentiment that we have in the markets here with, you never know, one day could bring about immense volatility that you don't expect in one of these markets.
Yeah, I mean, you're right. And I think those soft ag commodities are a very good example of that. Whether it's your cocoa has been absolutely crazy this year. Coffee has been maybe second place to cocoa here recently. We've seen some extreme volatility and some sharp moves in coffee. It seems like they're coming for the things that we like to drink for breakfast, right? We like to drink coffee. We like to drink orange juice. I mean, orange juice had a heck of a run for a couple of weeks, making some new highs. And then we had 3 days in a row of limit down, and then we were limit up, and now, sharply lower again today. So it gets very emotionally difficult to trade a lot of these markets. Cotton, I mean, we had a nice run up in cotton just for them to absolutely pound it from 83 down to almost 73 here in the July contract today. So 10 cents a pound, that's a big move in cotton, and we did it in a very short period of time. So it's one of those things where if you are trading a market outside of your core, what you have to probably reduce your position size. You have to try to be disciplined with stops. The market has been very unforgiving in some of these outside markets and really making the grains look tame by comparison.
Any notes in the protein sector? I know cattle kind of drifted lower Tuesday. That market definitely got beat up last week for sure with that JBS Colorado plant news with China and et cetera. Hogs, just when you think you got a bottom in hogs, you put us down triple digits again Tuesday. So anything big on the charts in cattle or hogs that you're paying attention to, Brian?
Well, I think the lows that we had yesterday in both live cattle and feeder cattle are going to be important lows. The August feeder cattles yesterday went and they hit their uptrend, their operative uptrend, and we bounced off of that nicely. We really have been unable to see momentum continue off of that, and then we faded back today. We are hearing some more headlines about bird flu now in Idaho. So I don't know if that story is over or not. I suspect that if we see more headlines, and that's going to continue to be something that'll pressure the market just because of sentiment. But I think as long as we can hold kind of these early week lows in both the live and the feeder cattle, June looks underpriced compared to cash. There's really no cash bids or offers early in the week yet. The pattern over the last several weeks is we probably don't see anything till Thursday, Friday. It's been more of a later week cash event for cattle. But I still, in the big picture, going into fall, late winter, or I should say early winter into late winter, I think there's an inordinate amount of downside risk in the cattle markets. And so again, I have really been advocating for December, February, put positions in live cattle. January feeders. I think there's some cheap options out there that could pay quite well if this market does what I think it might do. And again, it's very similar. You just think about all right, in 2012 we had a drought and the crop didn't get any better, right? But eventually you go high enough and you top, and then it does things to demand. And I think that's the scenario that we're in right now for cattle, where the fundamentals are still friendly. That really hasn't changed. But I think in the long run, we're doing things to the consumer for beef demand and also just all the other pressures on consumers right now, where as we get into the end of the year, I'm not confident we're going to be still trading at the levels we're at currently. You mentioned the hogs. I thought the hogs were trying to bottom as well. I thought, that maybe we've had about a month sell off. A lot of times hogs like to move in 1 month intervals. Mm-hmm. So I thought maybe as we got into late May that we'd start building a base. I was hoping that we could get July to close back over 98. We actually opened above 98 yesterday, looked good on the open. And then what do? We reverse, we finish on the lows, we take out the previous day's lows. And then here today we gap lower. So the hog market's been a difficult market to fight here, if that's what you're doing. And the chart looks like there's not a lot to stop us from possibly revisiting contract lows. And that would be a real tough pill to swallow if that's what happens.
Markets can be fickle. Charts, fundamentals can tell us quite a bit as we look through things. And I know folks definitely need to be on their toes and have conversations with folks like yourself there at agmarket.net. If they got questions about their marketing plan, I know they could reach out to you or anyone on the team. You guys have an app you just rolled out once again, an updated app. So I know you guys got a lot of stuff available for folks, don't you, Brian?
Yeah, look us up online, www.agmarket.net. The new app is basically the old app, but we refreshed it. We added some new functionality to it. That's also where all of our research, or what we call our intel, is distributed through the app now instead of our website. So you can look at that and get a free trial at agmarket.app.
Brian Splitt, always appreciate the insight. Thanks for joining us on the show today. We'll talk to you again soon.
All right. Appreciate it, Jesse. Thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.